Hello, traders. Let's take a look at our most recent pick and then use our systematic trading approach and Option Stalker Pro to find a new pick. Let's get started.
It is Sunday, September 24th, and our last pick was AKAM on the long side. You can see how the stock did break out through this horizontal resistance. That's exactly what we were looking for. This is the price action on Wednesday. You can see how the stock continued to push higher. Let's go into the 15-minute chart. We'll be able to see it more clearly. There's your nice rally on the open. Now you can say, hey, you know what? Yeah, sure, the stock is a little bit higher than it was Wednesday morning before the market when the video was recorded, but it hasn't really gone anywhere. Well, this is a major accomplishment given that the market has had 3 steady days of selling. And we'll get into the market in just a second, but we'll also take a look at our bearish pick. ACAM, I still like it. This stock has incredible relative strength, and we can see that on the daily chart. When the market is selling off hard, this stock is breaking out to a new relative high. I like it. In fact, I think it's going to work out really well when the market bounces. Our bearish pick of the day was NIO. And there you can see this long red candle. This is what I was keying off of. We had this upward sloping trend line that was breached to the downside. We had all the major moving averages that were breached as well. And you can see how the stock did not sell off, but it's lingering around the low of this long red bar. You can also see that even after a day of heavy selling like this, when the stock would normally have a decent bounce, we knew that in the last video, and what we're going to be looking for is for half of this long red candle to be preserved, and it was. Now we should see some additional selling pressure. So typically after a big move like this, it's going to take a little time for these losses to be digested, and then the sellers will return and the stock will have another leg lower. I still like NIO on the short side, so that stock should play out very, very well. Let's take a look at what the market is doing right now. So we had the FOMC statement this week. It was hawkish, but it wasn't really a surprise because the market was looking for a potential rate hike yet this year, and the Fed has been very vocal about staying in a tightening mode for a longer period of time. So they said expect higher interest rates for a longer period of time. Well, the market didn't like that. And we can put up the wedge formation that was forming, and you can see how the SPY had this wedge. There's your downward sloping trend line, there's your upward sloping trend line. You can see how we've been compressing right around the middle of that range, right around that 50-day moving average. Well, when the FOMC statement came out, we knew that we were going to get a breakout one way or the other. We just didn't know which way it would be. So it took a while on Wednesday, and we can go into that 15-minute chart and take a look at the price action after the FOMC statement. It was very choppy initially, lots of back and forth. So this is when the statement came out, and it took about an hour for the market to finally decide that, yeah, this is hawkish. This is a splash of cold water. We don't like the news. Sell, sell, sell. And then the market actually broke through the prior day's low, and it was breaking through that wedge formation. So now it is taking on a slightly bearish tone. I say slightly, and I'll get into that in just a second, but we have this upward sloping trend line breach. That is significant. We are below the AVWAP-Q. That is significant. We're below the 50-day moving average. That's also significant. And you can also see that we are below the 100-day moving average. These are all major technical breakdowns. So why do I feel like the market's not going to go anywhere? And I really do feel that way. Well, because the market hasn't gone anywhere in the last 3 months. So we are testing the lower end of this horizontal range, and there's the upper end of the horizontal range. So I'm looking for a bounce in here. And if I take a look at the chart, we've had 3 really nice days of selling. Go back and take a look at when we've had the last 3 days of nice selling. When have we seen 4, 5, 6 nice long red bars forming together? Well, the answer is we haven't. So if I start scrolling back and looking for this type of selling pressure, okay, we had a little bit of selling pressure in here, but we had overlapping candles. We weren't breaking any major support levels at the time, and then the market bounced. But this is the last time that we had anything remotely close to this type of selling pressure, and then boing, we bounced. Let's keep going back. Hey, here's another one. That's pretty nice, right? We're breaking some major technical support levels in here. Beautiful. Hey, this looks really good. We've got this upward sloping trend line that's been breached. Yeah, and there's our relative high. Bounce. Hmm. Okay, well, maybe in here. There's three nice candles breaking some technical support levels. Bounce. All right, let's keep looking. Kind of in here, bounce. Kind of in here, bounce. You get the idea. The market does not go straight down or straight up, and we see lots of retracement all the time. So why wouldn't we expect that to happen here? Well, I am expecting it to happen. We're going to have a test of support. We had that test of support Friday, and we bounced, and it looked like it was going to be a nice, decent day where we would continue to have a choppy grind higher. But later in the day, the sellers came back and they wanted to test the bid again. And they actually, there's your nice choppy bounce, mixed overlapping candles, and then we had a lower high double top. And that happened to coincide with a bearish 10P cross. Then we saw some pretty decent selling. We also saw a nice rebound, and you can see that was a substantial rebound off of the low, but then we had more volatility and another bid check. To this point, we've seen buyers and sellers paired off. Buyers have the ball, they run the market higher. Market hits resistance. Sellers have the ball, they sell it off. It's been this back and forth choppy type of price action with both sides engaged and both sides taking control at various times. And that's led to very choppy market conditions. That's also led to this trading range. So if we take a look at what the news was that came out, what would possibly justify a longer term sustained market decline? Was that news material? In my opinion, no, it wasn't. So the Fed is pretty close to the end of their tightening cycle. We know that. We're seeing some softness in economic conditions, but generally really decent economic conditions. Initial jobless claims came out around 201,000 last week. That's a strong number. The jobs seen is still very good. We're starting to see a little bit of weakness here and there in the ISM numbers and the PMIs and Chicago PMI, but nothing dramatic at all. And that's what's giving the Fed latitude to stay in their tightening mode. They also know that the market was relatively close to a 52-week high, so investors are not overly cautious or concerned right now. There aren't any credit issues or credit concerns that are looming. So the market should be able to find support. Now, this is not similar to what we saw a year ago. And back in here, we did have some nice stacked long red candles that had follow through to the downside. But mind you, this was when the Fed was hiking at 75 basis points every meeting. And they were super, super aggressive. Nobody knew if the bottom was going to fall out of the economy or if this was going to cause some major type of financial crisis. So, yes, err on the side of caution, sell, 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 sell. We're not there right now. I'm not bullish, so please don't construe my comments as being bullish. I'm not. I simply think that we've got to either have the Fed stop tightening. We have to see some ease, major abatement in inflation, or we need some type of credit crisis, or we need some really big drop in economic activity. So if we get a credit crisis or a big drop in economic activity, blam, blam, blam. Now we do have one event that is on the fringe. I'm not overly concerned about it, but it could weigh on the market, and that is the debt ceiling. And so now politicians are going to be scrambling to get another deal done. It seems like we're going through these more and more often, and it wreaks havoc on the market. So we'll see if they can get a deal done. They always wait till the 12th hour. Both sides try to use whatever leverage they have, and then they sign an agreement, and then the politicians go off on holiday. So I'm expecting something similar, but since we do have this type of downward momentum, since we do have seasonal weakness taking place in September and October, we can expect that, yes, the market might get a little bit nervous after this type of breakdown, and we could come down and test the 200-day moving average. But I don't believe we're going to do that instantly. I believe we're going to see some bounces along the way. Every move in this market has been two steps forward, one step backwards, two steps forward, one step backward, two steps forward, one step backward. So why wouldn't a sell-off be the same way? Sell off, bounce, sell off, bounce. That's the mode that we're in right now, and we should be for about the next month or so. So when you see a big market decline, you take profits. You go to the sidelines. You wait for the bounce. You wait for signs that that bounce is stalled. Now we're hitting resistance. This is where you reestablish your short positions. You get the nice big sell-off through major technical support. That's where you take gains on your short positions, and you wait for the next bounce to unfold. Wait for that resistance. Now we're evaluating on each one of these drops and each one of these bounces, we're evaluating that bounce. What do we want to see in that bounce? Well, what I'd want to see as someone who is slightly longer term bearish right now is I would want to see that bounce be wimpy with mixed overlapping candles, very light volume, and I'd like to see us hit resistance at that 100-day moving average or at that AV/WAP-Q, and then the market just kind of stalls out and it can't get any higher. Well, that's where you would want to start reloading some of your short positions, looking for that next big drop down. And then when you get it, let's say it goes this 200-day moving average, then you start taking gains on it when you see this type of heavy selling pressure. So as far as next week is concerned, I don't believe that we've seen that firm low that buyers are going to be looking for. Well, what does that mean? Well, buyers are not going to stick their head in the news. They're not super anxious to buy given the recent price action. What they would have liked to have seen on Friday would have been something along the lines of nice little bounce, pull back, almost challenge the low of the day, and then get this type of formation that closes near the high of the day. This is a little bit too weak, and buyers are not going to be super excited when they see this type of late day selling right here. So I think that we still have to form intraday a higher low double bottom, and we need to finish close to the high of the day, then we should get a bounce that lasts maybe 2 or 3 or 4 days, and we should be able to challenge the 100-day moving average. So again, I'm looking for a nice little bounce. You know, it's going to be herky-jerky because sellers have the ball right now, so you're not going to see stacked green candles. Buyers are not going to be that aggressive. There's absolutely no reason for them to be right now. Instead, what they'll be doing is they'll be probing, 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 trying to get something going, looking for that higher low double bottom, and then a nice close near the high of the day on decent volume. If we get that, then we should have a day or 2 or 3 of follow through to the upside. So that's kind of how I'm playing it right now. I'm not really aggressively looking for short positions. Sure, if you find a stock that's been breaking technical support, it's got heavy volume, you can ride those shorts for a while because you've got that bearish market backdrop. But I'm looking for a bounce, and I'm kind of looking for this horizontal trading range using this 430 level to hold, and then your high is somewhere around 460, and we bide time inside of that range while we're waiting for major material news, either on the Fed stopping its hiking, stopping its tightening, or inflation comes in considerably, or the other extreme. The economy starts to show some real weakness, or we start to see some credit issues surface. If that happens, then we're going to break the lower end of that trading range, and that will lead to a sustained move because those are material items, those are material changes in market conditions. So for today, I'm just going to look for some bullish picks. You have to wait for these signs of support this week. And when we get them, these are going to be short term trades. These, you could say, are contra trend trades because the market recently has been in a downtrend for about the last 2 months. But I'm viewing it a little bit differently. I'm viewing this as more of a horizontal trading range that we're in with support, support, support forming here, and we get a nice little bounce in here. So that's what I'll be looking for. So we're going to take a look at some bullish picks. Now, I thought I would just do something very easy. I'm just going to go through. I do have a really nice bullish pick. I better go through and take a look at the biggest stocks. It's what most people want to trade anyway, and we'll see if the big five, big six tech stocks have anything for us to lean into. So if we're looking for that bounce, what stock might fit the bill? Well, here we've got Apple, and we could see this big gap down after earnings, has a decent bounce, gets back in, I believe fills that gap pretty closely, but then continued weakness, and it's currently on its low. So no, I would not see Apple as a particularly strong stock. And this red line, by the way, is the AVWAP-E. I do consider that as significant, as much so as some of the major moving averages. So yes, I use that as a gauge of where buyers and sellers should be. If we're below it, there's some selling pressure. If we're above it, that's good. It's support. It's a level that we should continue to see buyers at. This is Tesla. You can see this downward sloping trend line. It's in a wedge formation. So no, I would not be trading this because it's going to break one way or the other. Amazon. Amazon's been relatively weak. You can see this nice technical breakdown here. You can see major resistance up here with all these trend lines coming into play. It's below the AVWAP-E. It's testing this major moving average. Amazon, if it can crack down below that 100-day moving average, could actually be a decent little short. Meta. Meta looks great. Here's what the market's done on a daily basis. Down, down, down. Here's what Meta's done. It is compressing near its high. It's right on that AVWAP-E, very, very close to it, well above the 100-day moving average, just barely below that 50-day moving average. It did not flinch when the market sold off hard. I think if you're looking for a stock and you want to trade one of the bigs, you can see the relative strength here on Meta volume. Okay, increasing. Let's take a look at the 15-minute chart and see what it's been doing. Again, mind you, and maybe the easiest way for me to demonstrate this is just do a SPY overlay. So the gray line is the SPY, and you can see SPY has a pretty big drop in here. Meta flat. SPY rallies, Meta up. SPY, this is a pretty big drop for SPY, and Meta sold off, but you can see how it's been able to recover those losses when the market has continued to drift lower. So that tells me that yes, Meta is pretty good. Out of the big tech names, I would say it's probably the strongest of the group. So let's take a look at Google, see what that's done. And Google, you can see, is testing that upward sloping trend line. Not horrible, but that's a breakout right there. So this is looking like a little bit of a failed breakout. It needs to hold this level, and then it'll have a chance to recover. So not the worst stock. It's got some support levels in here that it's staying pretty close to. It's still hugging that AVWAP-E, so that's all good. Microsoft, relatively weak. You can see it's still above zero as far as relative strength, but major technical breakdown here, it's below the 100-day moving average. Yeah, I would say Microsoft, I would favor the short side on it, and you can see this wedge formation right here that's been breached to the downside, very similar to what the market's gone through. So Microsoft, I would not be overly bullish on. And then NVIDIA breaking this fairly significant upward sloping trend line and testing that 100-day moving average. So out of the big tech names, Meta looks to be about the best. But we're trading a bounce. So first of all, we have to respect that the market has a breakdown here. So on a longer term basis, this tells us that if we trade from the long side and if we're trading a bounce, we'd better make sure that the market has found some support. And number two, we'd better make sure that we trade smaller size because we have to respect this most recent move and this most recent breakdown in here. So let's take a look and see what we've got. Now, on a day trading basis, you're probably going to find a lot more stocks that are kind of catching up to this market move right here, but many of them are fairly overextended on the downside because we've had 3 days of really heavy selling. So even on those stocks, you may be swing trading them, but you should probably be looking to take gains in here because you could have that really big bounce in here, and that's going to strip away a lot of your profits. So you should be more in profit taking mode or day trading mode where you're really looking for short-term intraday opportunities to maybe capture the last little bit of this move lower. So when I go into my searches, I went in and I took a look at bullish SMA cross. So I thought, hey, the market is down, down, down. Is there any stock that's actually crossed above a major moving average recently, specifically Friday? So I went through the list and I took a look at which stocks qualified. There you can see AVGO got back above the 100-day moving average. Still has to get through this trend line that was breached. No, I'm not going to trade that because it's been weak recently. NVIDIA, we took a look at TEAM. We can see here that the stock has backed off of the high. It's testing this 50-day moving average right here. Had a pretty decent day on Friday. Yes, it could rally up and get through this AVWAP-E. So not bad, but it's a very choppy stock. So it's not going to be of great interest to me. Now here's a stock that is of interest to me. It still looks pretty weak in here, but what grabs my attention is this. Two long green candles and big volume and recent relative strength. Now, these are not just your ordinary run-of-the-mill candles. These are gigantic, long green candles stacked and finding resistance right at the 100-day moving average and right at that high plus trend line. You can see that it's broken through this high minus trend line and this high minus trend line. This is nice. It's back above the AVWAB E. It's got a lot of good things working for it. It has had relative weakness recently. There's a horizontal support level that was breached and breached heavily. But look at this earnings reaction. It was pretty good. It filled in and got above that horizontal was resistance. Now it becomes support. So we've got that support line in there and we get a little bit of a pullback. It's a choppy, volatile stock. It is a therapeutics company. So this is a biotech. It's probably had some news and it's probably good news given these stacked green candles. So it doesn't have fantastic option liquidity. So you're going to have to trade the underlying stock, but it's only a $40 stock. I believe that we're going to see some continuation in this move. Let's take a look at the 15-minute chart, and there you can see. Look at that heavy volume, and look at that steady price action. So this is what we want to continue to see. So as we're waiting for the market to set up, here are the tells that we'll be watching for. So you've got the market probing, 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 probing for support. And when it has that bounce and that higher low double bottom intraday and a candle that closes on its high, we're going to be looking for exactly a candle like this. So you start your day off, there's your open down in here, and you grind your way higher, and you get this nice long green candle. Well, that sets up your bounce. And that is what's going to tell buyers that, okay, we've just established support, and now you get a little bit of relief. So when you see this type of candle with a market closing on its high, nice long green candle, you can be pretty confident that we're going to also test that 100-day moving average and the AVWAP-Q. Well, during that probing process where we're still trying to establish that bid, what do you want to see MRTX do? Grind higher. We want to see those buyers still engaged. They want this stock. They don't care what the market is doing over the course of the last few hours. They know that they want to own this stock 2, 3 years out. And that's why they are persistent buyers. And you can see that the volume is not particularly great. Let's go into the daily chart. So you've got about 3 million shares trading now. There's 5 million shares, but the normal average daily volume somewhere around 1 million shares or so. So it's viable for us. You don't want to go overboard on this. These are just short-term trading profits that we're looking to take advantage of. We're looking for that market bounce. There are probably some other stocks that'll start showing up on our radar. ACAM looks like a really good stock to me. I showed you Meta as well. Those will be stocks that you want to keep on your radar. You don't want to go overboard. You're looking at this as simply a bounce, and then sooner or later, they're going to test the bid. So we want to make sure that we're setting relatively passive targets. We're watching that 100-day moving average. But yeah, we're going to bounce a little bit. We'll find some opportunities there, and then we'll be able to evaluate the height and the duration of that bounce. If it's very brief and it's really wimpy and the volume's super light, then we're going to expect that there's going to be another leg lower that tests support. If we start, for some reason, stacking a couple of long green candles on heavy volume and absolutely blowing through this 100-day moving average, well, then we're probably going to drift back into the middle of this range, and we'll be back in wait and see mode where every news item is scrutinized. So I hope that this technical analysis helps you. I'm not going to show you a lot of bearish picks because I think they're super overextended, and I hope to get another video out sometime this week. I'm going to be taking some time off, so I'll try and get one out when I can. Thanks so much for watching. Please leave your comments.
Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.